Welcome to Tax Time with Timalyn. I am your host, Timalyn Bowens, America's favorite EA. So, Tax Time with Timalyn, if you're new to us, is where I answer your tax relief questions that you send in. So, if you have a question for me about what to do in a certain situation when you owe the IRS, or what to do in a future situation to prevent owing the IRS, you can feel free to send those in to me at inquiries at bowenstaxsolutions.com. I'd love to answer one of your questions in a segment. So, I don't want to waste any time. I want to get right into this question. Um, it's crazy. Like, you wouldn't believe how many times I see this. So let's get right to it. I always get a refund, but now I'm married and I owe. What happened? And no joke, that's exactly how the question came in. Some people forego all formalities and get right to it. I like it. So, this actually is a lot more common than I would think. But again, forgive me because I am a self-proclaimed tax nerd. What happens when people get married? And before I answer, let me start by saying congratulations on your nuptials. Um, you know, there's so much paperwork to be filled out when you get married. There's the marriage license. If one or both of you changes your last name, you got to fill out that documentation. You have to update all this different stuff. But nobody talks about your W-4. So if you work as an employee somewhere, you have the W-4 that tells your employer how much money to withhold from your checks when you get paid, right? Each pay period, they're withholding a certain amount to go to federal if you live in a state with state income tax, and then also local. When you get married, all the marital bliss. If you do update your W-4, both you and your spouse are putting that you're married. And this is what happens. Let's say that we have a couple and they both make, I don't know, let's say $70,000, okay? So in 2020, if you were single making $70,000, you were in the 22% tax bracket, okay? So both of you were, withholding tax, nothing new, we're good with it. When you get married and you inform your employer that you are married by putting that on your W-4, you have to make sure that you have additional withholding done, okay? Both you and your spouse, or if you guys agree that one of you will, it has to be done because listen to this. This is what happens. You both make $70,000. You both tell your employer, hey, I'm married now. Spouse A, when they fill out their W-4, it only takes into account their income if no additional withholding is chosen. Same thing for spouse B. So to put that into a little bit more perspective, looking at 2020 again, and for next year, the standard deduction will be a little bit higher. But if we're looking at 2020, married filing jointly, standard deduction is 24,800. Okay. Next year is going to be 25,100. Well, when you put married, your employer is not really going to start withholding tax until after your first $24,800 for 2020, and not till after your first 25,100. So I get a lot of people, they're like, oh, this is awesome. I got married. Standard deduction's higher. I get to be in a lower tax bracket, which if you were doing married filing jointly, your employer doesn't know to account for other income at $70,000. If that was the only income coming into the house, you would get to drop from the 22% tax bracket down to the 12% tax bracket. So I have people get really excited because they have all this money, right? But because now you're doing married filing jointly, instead of $70,000 getting taxed, we have $140,000 getting taxed. So you guys are getting pushed back to the 12 or back to the 22% tax bracket, but instead of having 22% withheld, now you only have 12% withheld. And to make matters worse, spouse A, your employer is not really withholding taxes until you make your first $25,100 for 2021. And spouse B, your employer is doing the same thing and not really withholding until you make your first $25,100. So not only are we about 10% lower than what we should be, we are just grossly under withheld. But check this out. When you are in this situation, the IRS does provide you with a payroll withholding estimator. You can go look it up on irs.gov. But if you want to kind of have an idea for what's going on, you can always fill out your W-4 using the paper form to figure out what the additional withholding should be. Now, I like to tell my clients the whole reason you had to learn algebra in high school is so you could fill out your W-4 when you get married or have an additional job. So, what you're going to do on the W-4 at the top part, you're still going to put that you're married, right? So, then we're going to go to step 2. And because we have that other income to factor in, like I said, of course, you can use the withholding calculator on the IRS website. If you guys have similar incomes, there is a box you can check, which in the example I gave, 70,000, 70,000, those are similar. You know, you'd be all good. Everything would be figured out itself. But let's just say that one spouse made 70,000 and one made 90. Okay. So what you're going to want to do is line 4C, ask if you want to have any additional withholding done. And believe me, you do, because you don't want to get a surprise at the end of the year come tax time that you owe a few $1,000s to Uncle Sam. So we're going to go to page 4 of the W-2. Now, the reason we're going to page 4, there are 3 tables, okay? There's one for single, there's one for married filing jointly, there's one for head of household. We're going to go to the married filing jointly table, and make sure I'm saying the right one. The columns are for the highest paid salary, and the rows are for the lower paid salary. Actually, I think I just flipped that. But if you pull up the W-4, page 4, you'll see what I'm talking about. And what you do, we're going to go down on the left and find the higher paid salary. Okay. So once we go down and find the range where 90,000 is, we're going to go over and find where the 70,000 is. And wherever those two intersect, that's the additional amount that needs to be withheld. Now, don't freak out because it's going to be a really big number. So what the IRS has done is on page 3, there's a worksheet to help you figure all this out. So we're going to take that number, we're going to put it on the first line on page 3, okay? Then we're going to figure out how many pay periods are left in the year. So if you're doing this in January, you get paid every other week, that's going to be 26. If right now it's August, we have about 10 pay periods left, it's going to be 10. Just keep in mind that if you are filling this out and we're already partway through the year, you want to go back in January and adjust it so you don't have too much withheld and you don't get a massive refund when you could have had your money during the year. Unless you prefer to get a massive refund. I mean, to each their own, right? Well, once we figure out the amount of pay periods that we have left, that huge number that you got from the table, you're going to divide it by that many pay periods. So let's say, for example, the table says, and I'm not looking at one, I'm just pulling a number down that'll be easy for an illustration. Let's say the table says you need an additional $10,000 withheld for the year. Okay. If we have 10 pay periods left, that means each pay period, so each check, $1,000 extra needs to be withheld at the federal level. So you might be like, oh my goodness, $1,000, that's ridiculous. But check this out. The IRS worksheet suggests that that additional is withheld from the higher paid spouse. But what I've seen couples do is they split the amount. So instead of one spouse telling their employer on line 4C to withhold 1,000 additional dollars, the two spouses decide that they're going to each fill out a new W-4 and have their employer withhold an additional $500 instead. You have to sit down, look at your budget, whatever works best for your family. Another thing, when there's a spouse that hasn't been working, they're coming back into the workforce. And when I say not working, I just mean a traditional 9 to 5. When they're coming back into the workforce, if the other person's check is already budgeted out, I often recommend that the spouse who's getting back into the workforce is the one that has that additional money withheld, because that money is not already budgeted towards something. Make sense? If it doesn't make sense, be sure to drop me a comment down below. I would love to give you any clarity at all on what I just went over. I also want to point out that if you and your spouse both work more than one job, the best solution is going to be to use the um, withholding calculator on the IRS website. Now, keep in mind, our new W-4s are designed to help you keep more of your money in your pocket throughout the year. So using this method is not going to result in a big refund unless you have itemized deductions or dependents, something else that wasn't figured into the scenarios that I just gave. So with that being said, remember, you need to be closer to the additional amount withheld, because the whole point of this form is so that you break even, so that you don't get a refund, but at the same time, you don't owe. So like I said before, if you have any questions, drop them down in the comments for me, please. And if you have a question that you'd like for me to answer on Tax Time with Timalyn, send it to me. You're going to send it to inquiries, INQUIRIES at Bowens, BOWENS, taxsolutions.com. Now, I've also seen this spiral out of control. I've had couples where they owed the first couple of years, so then they stopped filing. And then when they come back, it ends up being $20,000, $30,000 at the Owe the IRS. Don't let that happen to you. If you feel like you are spiraling down that road, be sure that you book an appointment with me, which you can book at www.bowenstaxsolutions.com, and book the no obligation tax relief evaluation. That way, we can sit down together to see what the best option is for you that would also satisfy the IRS. That is going to be it for me this time. I hope that you found this helpful. Be sure that you like this video and share it, because 1 in 50 people owe the IRS. So that means somebody in your circle needs it.